Just about a week ago, Fundrise have made history yet again. Unfortunately, this time, it was not the history that any of us will want to remember. For the first time since inception of Fundrise in 2011, the company has reported a negative quarter return. Many investors are freaking out and are in full-blown panic mode, trying to sell their shares. But is the situation really as grim as many make it out to be? Coming up. If you're new to Fundrise, make sure to buy this dip and open a new account using my referral link in the description below and deposit just $10. For a limited time only, you will receive a $50 bonus absolutely free, no strings attached. Don't miss this opportunity. Now, let's get started. So the first thing that I want to go over is the third quarter results across my two Fundrise accounts whose total value is somewhere around $130,000. In short, both of my accounts saw a negative third quarter return. So let's take a look at my first account here. What we're gonna do is we're gonna click on the performance tab here. And as you can see, there's a negative 1.1% return for the third quarter of 2022. Now, if we just zoom out a little bit, we could see that this loss is led by the East Coast E-REIT here, which saw a 1% decline. And then if we scroll down a little bit, we're going to see that the flagship real estate fund saw a 0.8% decline. And of course, the biggest loser of all, the growth E-REIT 7 with a whooping 7.2% decline. Now, even though these numbers look pretty grim, there are a few things that I want to show you here. We have to remember that on a year to date in 2022, we're still up by 4.7%. And that's not all. If we look down here, we could see that in 2021, our total return was 29%. So keep that in mind when you're just looking at the third quarter that had a negative return, yet the year to date of 2022 is still up 4.7%, and the previous year saw a crazy unheard of return of 29%. So this is it for this account. Now I want to show you my next account. This is my second account, and we're going to do the exact same thing. We're going to click on performance, and what we're going to notice here is more of the same. However, in this account, we see a negative 1.4% return for the third quarter. And of course, this loss is led by the same culprits as in my first account, namely the East Coast E-REIT, the flagship real estate fund, and the growth E-REIT 7. However, again, even though the loss is a little bit more in this account, we have to remember that year to date, we're still up at 5%, and in 2021 this account saw a whooping 32.5% return. Again, the numbers that are unheard of these days. Now let's go back to my first account here, and we're gonna just zoom out, and there's just one thing that I want to point out, and is that if we look at the East Coast E-REIT and growth E-REIT 7, they're both the top performance in the second quarter of 2022. So we look at the second quarter, East Coast E-REIT had an 8.2% positive return, and growth E-REIT 7, 6.7% positive return just one quarter ago. Okay. However, in the third quarter, they're the worst performance of all. I can say I'm surprised by this because I do live on the East Coast, and in the last few months, the prices and demand for real estate have finally started to decline, just like they are across the entire United States. Now, flagship real estate fund also saw a negative 0.8% return, but after a 40% positive return in that fund in 2021, that is probably to be expected. The third quarter losses are led mostly by a decline in value of real estate. That means there's a decline in appreciation rather than a dividend return. So why is this happening? As many of you heard, the Fed keeps raising the interest rates in order to tame a red hot inflation, which they caused in the first place actually by printing trillions of dollars for the past 2 years and thinking that inflation is going to be transitory. They obviously knew that it won't, but they tried to calm the public. Now they look like fools. High interest rates make it unattractive to take out a mortgage to buy a house, since most people cannot afford to buy a house right away in these crazy prices with cash. So the mortgage is almost a necessity. However, even those people who really want to own the house don't want to pay 6% or more interest on their loan. They will never pay it off and the monthly payments will be crazy. So no one wants to pay that, and therefore there's decreased demand for housing, and more houses are being put on the market for sale, trying to sell at the top, but it's a little too late. No one wants to buy, and no one can actually afford to buy. Therefore, the demand is going down. Therefore, the value of these real estate prices is going down. And that is why we're seeing a decline in our portfolio. But make no mistake, this reduction in real estate value is normal and was expected, as some areas of the country saw housing prices double during the COVID pandemic, as scared people who were scared by the government and by the news that this is the end of the world, they were fleeing the cities, and they're now able to work from home, so why not? So the demand for a single family house was through the roof for the past 2 years, and people were paying so much money for houses that are actually not even worth half of that value. So this leads to the next thing, and I have received a few negative comments about this. So my viewers know that I've always been a big proponent of the long-term growth investment strategy with Fundrise. This strategy gets 70% or more of the returns from value appreciation of a property rather than the dividends, which are derived mainly from the rental income and interest payments on loans. However, I stand by my recommendation. Long-term growth strategy pays off over many years. We're talking 5, 10, or 15 years. So for long-term mindset investors like me and you, it is ultimately irrelevant what is happening right now in the market, or what's happening next year, or the year after that, or even the year after that. It is true that those investors that are in a long-term growth strategy are probably experiencing bigger losses in the third quarter than those that are income or the balanced investment plans, but I'm certain that over a 10 or more year period, that I and you will come out on top. Also, it is important to remember that long-term growth also has balanced and income-based investments in it. And so some losses from appreciation will ultimately be balanced out by the dividend returns as long as rental markets stay competitive, which in itself can be debated right now. Rents may start to decline soon as well. Eventually, people will refuse to pay $5,000 a month for a one-bedroom apartment in some weird neighborhood. Guys, by the way, if any of this sounds gibberish to you, then make sure to check out my entire Fundrise playlist that I'm going to link in the description below. It has over 40 videos on everything and anything you need to know before, during, and after investing with Fundrise. The question I've been getting a lot is, should I switch my investment plan from long-term growth to income or balance now that the values of real estate are declining, but the interest rates on loans are going up and the rental prices are staying stable or potentially going up? Well, the short answer is no. But for the details of why the answer is no, make sure to like and subscribe to my channel, as my next video will go into more details about this popular question, so don't miss out. So what does this disappointing quarter means for Fundrise and us, the investors? Well, this is the first time in over 10 years that Fundrise has posted a negative quarterly return, and of course it is uninspiring and scary, especially for the new investors who haven't been through something like this. But I'm here to tell you that all winning streaks come to an end eventually, may it be in sports or investing or in other things. However, it is important to remember that new streaks always begin, and individuals and teams always come out better, bigger, and stronger after big, disappointing losses. The important thing to do right now as investors is not to get spooked and just follow the plan. and have conviction in Fundrise and the investments that you have with them. Actually, in January of 2022, I made a video where I made a bold prediction that we'll see a positive yearly return with Fundrise of anywhere between 4 and 8%. I still stand by that prediction as we're right on track to hit that goal. It is also important to remember that the returns we saw in 2021 of over 30% are likely a once-in-a-lifetime situation. And as we're investors and not speculators here, we should know that the average yearly returns between 8 and 12% over a 10-year plus time frame, obviously, is what we should be expecting and should be happy with. Fundrise is easily beating these expectations so far. It is also important to remember that in 2022, the stock market is down over 20%, crypto is down at least 50%, and public REITs are down over 15%. But Fundrise is actually up 4 to 5%. And this result should make your belief, conviction, and confidence in the Fundrise CEO Ben Miller and the team even stronger. Why would you be disappointed in an investment that is literally outperforming every other investment until this point in 2020? Now, granted, we don't know what's going to happen in the fourth quarter. Maybe we'll lose all of our gains for a year in the fourth quarter. We'll go minus 4%. Who knows? It is unlikely, but it's important to remember that so far, we have outperformed other investments by at least 20 to 25%. And that's success. Okay? And, you know, a lot of people just talk, but I always put my money where my mouth is. And so that is why I have over $130,000 invested with Fundrise in a long-term growth plus plan. Trust your plan, trust your research, and just stay put. Do not make any spontaneous decisions. Do not FOMO into anything or out of anything. Stay the course. And the final thing I want to mention here is that we're in truly unprecedented times right now. I'm sure you heard that many times. COVID pandemic have disrupted the entire supply chain. Supply and demand are completely out of whack. The war in Ukraine has made food, gas, and other things increase in price like we've never seen before. Inflation is like crazy. I mean, countries like Turkey are experiencing 83% inflation. People were saving money their whole lives, and out of nowhere, they lose 83% of that value. Like, you know, they lose half the value of their money that they've been saving for so many years in just 2 years. And that is why fiat money is just is not looking too good for me. That's why I do invest in crypto as well. And then other countries have accumulated so much debt that they can't pay it any longer. So there's freaking riots, on the streets. The government officials are fleeing. I'm sure you know what I'm talking about. And they can't pay the debt, and so they devalue the money while hurting, obviously, the savings of the ordinary citizens. And that's how it's always done. You work your whole life, you save some money, and then out of nowhere, that money can only buy you a cup of coffee instead of maybe a whole meal, And that is how it's been done for 300, 400 years. But unfortunately, I'm not sure why people do not pass financial knowledge to their children so they know how to accumulate wealth the right way. And that means not staying in paper money, which, in places like Zimbabwe, you could wipe your ass with a $1 billion trillion bill or whatever it is. So that's why investment is important, because usually things like real estate, if there's inflation, these types of physical investments go up with inflation. All right, they don't just stay the same, so you never lose value, especially with physical real estate. With stocks, it's a little bit different, but if you invest in good, strong companies, I'm talking Home Depot, I'm talking Pfizer. These companies, their stock, their value, the prices of their goods they selling, or of the medication they're selling, will go up with inflation. And that will ultimately reflect in the price per share of their stock. And again, you will at least not lose value of your money. You may even make some money down the line. So that's important to remember. for all the investors out there. However, with all this crazy stuff going on and being said, make no mistake that this too will eventually pass. One way or another, it will pass. I don't know how or what will happen, but it will pass. The Fed will turn the money printer back on eventually, reduce the rates, and we will see amazing returns once again. That is it for me, guys, but I want to hear from you. Do you think we'll see negative returns in the fourth quarter with Fundrise? How about 2023? Negative or positive? Or do you think this is the one and only quarter where Fundrise stumbles but not falls? Let me know. Leave your comments down in the description below. Thank you so much for watching. I hope you enjoyed this. Stay tuned for my next video. It will be a good one because literally there's so many comments you guys been leaving about switching, from long-term growth into balanced or income, and I'm gonna make a separate video for that. So make sure you like and subscribe. The video will be released probably next week. Yes, probably next week. Yes, definitely next week. So thanks so much for watching. Take care. Cheers, guys. Peace.